Right, I just wanted to jump on here dead quick and just show you the power of these first presented fair value gaps and new day opening gaps. If you've seen the video I did about a month ago when I talked about the first presented fair value gap on this channel for the first time, obviously it's not my concept, I got it from ICT. Feel free to go and study ICT's content if you want the more core version of teaching the first presented fair value gap. But that said, we will get into Tuesday's price action from last night. So, on Tuesday, the 10th of June, we had a very large overnight range during the Asian session. We shot up and then came back down. When we have a large overnight range, typically the AM session is going to chop. What's funny is if I draw the AM session from yesterday, from Tuesday's trading, it is this orange box that denotes 9:30 to 11 o'clock New York time. And this is the AM session, and then this orange box denotes the Asian and London session, so the overnight session. And I don't know what's going on in price right now, but recently, for some reason, these overnight sessions have basically swapped the characteristics with New York AM session, because if you showed anyone this chart and said, show me what session is what, most people are going to say, this looks like New York session and this looks like overnight session. But actually, in reality, this was the day session, the New York session, and this was the overnight session. So yeah, that aside, when we have these large overnight ranges, we can expect the New York AM session to chop, and then we want to look for our trades in the PM session. Because I'm in Bali, hence why I've got my shirt off, I am fucking cooking right now. I am not able to trade the PM session because it is just not doable with the time zone. The time zone here for the PM session is like 2 a.m. for the start of the PM session, or 1:30 in the morning. But that said, if I just clean my charts up a little bit here, we can actually go into that New York PM session and I can show you exactly what I would have been looking at and how I would have traded that session. So during the lunch hour, so for me, I start the PM session at 1:30 p.m. And before that, we had run up here and made perfect equal highs with the overnight session. So this high here, 21,931.0. This high over here, this exact same number. So these are perfect relative equal highs that I would be looking to target for that PM session. Obviously, in hindsight, they were absolutely smashed through and in fact ran for the high of the overnight session at 21,973.25. I wouldn't be targeting that. Obviously, if you had a position where you could leave a runner, then that is a potential for a runner, but I would have my focus on these perfect equal highs, because if you know anything about me, then you know I love myself some relative equal highs or relative equal lows. And now for this day, I'm going to show you the power of having your new day opening gaps and your first presented gaps on the chart. So if I just put down on the chart a couple of key levels, which are my new day opening gaps and Tuesday's first presented fair value gaps for both the AM session and the PM session, and I will show you what the PM session first presented fair value gap looks like, because even though I did a video on it a month ago, I didn't talk about the PM one because I wasn't aware of it. I hadn't been taught yet. So I will go into that PM session first presented fair value gap and show you that as well. But if I just drop down onto a 1 minute chart, I can show you straight away that this run after the AM session that went down tabbed right into a new day opening gap and then shot higher. We then ran up, made that equal high that I highlighted on the 15-minute chart, and then dropped back down, formed the first presented fair value gap for the PM session, which is the first presented fair value gap after 1:30 p.m. So if I just put a white line on 1:30 p.m. right there, we can then look to the right and we can look for the first fair value gap to form. And obviously that was right here, this 150 candle. So we form that and then drop past it. So we haven't had any sort of a reaction that would warrant me to drop down into a 15-second chart and look for a trade entry, which is how I approach those first presented fair value gaps at the moment. But we then dropped and the bodies stayed right above the middle point of the AM session first presented fair value gap. And while the bodies were stopping here, the wicks were going down and wicking into this new day opening gap, and then that sent us higher. So you could look for a trade entry off of anything there. Since we are in the PM silver bullet hour, you could trade a fair value gap off that, for example. So you have either a fair value gap or an order block entry right there off of the first presented fair value gap from the AM session, as well as that new day opening gap, as well as having the draw of those relative equal highs up here. Now, you might not think it's going to go all the way up to those relative equal highs, and you could in fact take some of your position off, say at these relative equal highs here. That was perfectly fine. But once we broke above this PM first presented fair value gap and then came back down to it and didn't get into the lower half of it and then rejected away, that fair value gap there would be absolutely a fair value gap that I would take to target those relative equal highs up there. Now, obviously, I wouldn't expect price to do what it did and run straight for that high and beyond. But in hindsight, it is of course pretty cool. And then just for transparency's sake, this grey box here denotes the daily fair value gap all the way back from the 24th of February. So that was dragged across, and then that is what I am using on that 1 minute chart there, as well as the first presented fair value gap from the PM session. It overlaps with the high of that daily fair value gap. But yeah, that's a very quick one from me. I didn't really want to stick around here too much, but I just wanted to show you guys the power of that first presented fair value gap, as well as new day opening gaps, new week opening gaps. You can also incorporate into this, and just looking for relative equal highs, relative equal lows in the market. Obviously, we are bullish on the daily chart, so we are going to have a better chance targeting relative equal highs just because of the underlying narrative of the market. It is trying to go higher, so therefore longs are obviously going to be a bit easier. But yeah, very short and sweet from me. I hope you enjoyed that video and learned something and can go and actually study these first presented fair value gaps, both the AM and the PM fair value gaps, as well as your new day opening gaps, new week opening gaps, and looking for those relative equal highs and lows. If someone was starting in trading and they had no idea what to look for, I would tell them to look for exactly that. So that is my advice to you, is to look for exactly that. But that is all from me. I hope you enjoyed and learned something. And if you are trading today, tomorrow, next week, then I will wish you good luck, good trading. Catch you later, boys.